The currency war is red hot at the moment, with weekly reports of China in particular fueling the rhetoric of ending the US dollar hegemony. Russia has also been very active at this talk, stating that they will be diversifying out of the US dollar and into safer investments. They have been partnering with China as the sanctions simply push them further away from the West. Slowly but surely, the BRICS are increasing in strength and the dollar begins to weaken. This monetary system is far overdue for a change. Let's get into the news right away. China is looking to dominate the gold market with International Shanghai Gold Exchange. This is huge news right now. I'll get into the highlighted portion where it says the People's Bank of China has been given the Shanghai Gold Exchange permission to begin to build an international gold trading platform in Shanghai. This news is absolutely massive when you think about it, where you have the largest gold producing and consuming nation, China, now able to have this international gold trading platform. That is massive. This is going to change the way the gold market is totally perceived, because you had that gold fix, the London gold fix, and they knew specifically that this was a fraud. The way that the numbers were being priced, just like the whole LIBOR scandal, they came together, they sit down, and they decide, what are we going to set the price at? And they just make it up. It's a fraud. So now, at least the rhetoric is there for them to be pricing their own gold and other things. Who knows down the road what they're planning on. So this article here is out of the NASDAQ. Russia to consider diversifying away from Western debt securities. Massive news once again. This is the currency war that is taking place, where the US dollar has the strength. It has all the money basically being funneled into it by its own consumers, by foreigners, and here we are right now, Russia considering diversifying its debt portfolio away from the countries that have imposed sanctions on Moscow. And that's the finance minister saying this. Is not just some analyst, not just me. That is the finance minister saying that nations like Australia, Canada, the EU, Japan, and the UK, the US, they've all put sanctions on Russia, and Russia's saying, you know what, why are we even dealing with you people? We have the countries like China and the other BRIC nations who we're good partners with. Let's deal with them instead. So let's move on very quickly. When I wrote about it in my book, you could see this. It's not just Russia and China. Even the Brazilian finance minister said that when the Fed started printing money to buy up its own treasuries, it said that they were, quote, engaging in a currency war. That's his words, the Brazilian finance minister. And even the Chinese premier a few years back said that the Fed's policy would result in financial instability and asset bubbles. And what has it done? It's exactly what it's done. Created these asset bubbles everywhere. Look at the stock market. But it hasn't changed one thing, and that is the super rich rush to buy Italian job, quote, style bars. And this right here, the economic uncertainties trigger a rush for the 12.5 kilo gold bars. Each of them are worth 300,000 pounds. This is huge. Big bars right there. So right here we have this news. The number of 12.5 kilo gold bars are being bought by the wealthy customers and has increased by 243% so far this year. That's big. The real rich want that security, want that safety. They want diversification as well. So they put their money in these big bars and they store them in vaults all around the world. And they're saying the Italian job style bars, they're the big ones. The standard individual generally does not ever buy these type of things. So that the rich, those who are on the inside, are buying the big bars, and that's very telling information. This is out of the New York Times, and basically showing you the difference between the per capita GDP over the past couple decades. But then you look at the median household income, and there's a great disparity that has been growing ever since approximately the year 2000. You could see that for yourself. The household income hasn't gone anywhere. In fact, it's gone down over the past few years. But the GDP numbers do not correspond. That's what I'm trying to tell you right here, that they keep pushing this GDP number over and over and over again, but it has no reality when it comes down to the median household income. big news. And that's a currency war on your own self, from your government to you. That's the way that works. This is the total market capitalization of the NYSE, all the way from 1925. So you can see this from the very beginning here. Look how it's practically in a straight line up. There's points where it goes down and so on and so forth, but you can see the market cap, it's been increasing. But look at that total market cap divided by the gross federal debt. And when you see those, things are much different at this point, because you can see it's gone nowhere. Speaking of debt, look at this right here. Debt needed to create $1 of GDP. You can see this for yourself. The reality of the situation is that they continuously have to go into more and more debt in order to prop everything up. The GDP goes up when they go into more debt. Also, this is a factor with the whole Federal Reserve. You look at their assets, you look at their balance sheet, so-called assets. Their balance sheet is increasing directly proportional to the stock market's increase. As soon as they stop printing the money, if they ever do, they may do it behind the scenes, and they raise interest rates, you're going to have a crash in the economy. The economy cannot stand without the Fed. That's just the way it is. This right here is going to show you the fragility of this market. Where there is risk, there's fragility. Where there's fragility, there's going to be a crash and a crisis. These are hundreds of different stocks that basically this is on the 19th, showing you right at 350. They just go wild. These are the algorithms. These are your totally fraudulent markets that have no basis on reality. And here they are, people are investing, they're putting their whole life savings into it, they're putting their whole career into it, and they're going to try to show you that, hey, it's all fine, it's, they'll take care of it. Whenever there's a bad scenario, don't worry, if there's anything with my bank, the FDIC will take care of it. I have insurance, don't worry about it. And in the worst case scenario, the Federal Reserve will just step in and pump up all this money. But the fact remains is that these markets are all fake, they're all fraudulent. Look at the algorithms, look at these computer algorithms that are just designed to screw everything up. Look at this is crazy. And anyway, I've ranted enough in this video. The currency war is on, and I hope that you take that very seriously. If you found this video informative, please give me a thumbs up, and don't forget to become an insider. The Insiders is where I give out all my best intel for free, and that's available at themoneygps.com. You scroll down to the bottom, you fill in your email address, and you get occasional emails from me with good, short, concise info.